Good morning, everyone. Welcome back to the Commodities Today video. And today we'll be doing technical analysis on natural gas, tradable ticker for net gas, UNG, as well as oil, US dollar, gold, and silver. So looking at their support and resistance levels, as well as levels that we could potentially play off of and where price will be heading into later next week. And let's get started on natural gas. So net gas here, looking at a little bit of a rising wedge here. And let me go to the unadjusted. Actually, I like the adjusted a little bit. So there's two charts, unadjusted and adjusted. Means one's adjusted for contracts, rollovers, and one's not adjusted. I use both. Both have different kind of levels and significance to them. And so right now we're looking at the adjusted one. So essentially, rising wedge here. And I like the 8-hour EMA 12 for a guide to potentially where we're going to bounce off of. So currently on the 8-hour, on the non-adjusted, we can see that, wait one second, let's let the EMA pop out. So tail looking line is the EMA. You can see on the way down, it's acting as resistance. And so on the way up, we want to see active support once we've broken above it. This part was a bit choppy. It was more of an equilibrium, and then finally broke above it. So when I see that back test here on the 8-hour EMA 12, I want to see this bounce and potentially head higher here. If we break the EMA 12 on the 8-hour time frame, we're likely going to drop lower back down to potentially this 1.67 level. Due to we go to the adjusted chart, you can see this rising wedge. Let me adjust this real quick a little bit. That we may break out of this support right here. So you see we bounce off of here. 1, 2, 3. So if we break out 8-hour EMA 12 as well on the unadjusted on the 8-hour EMA 12 earlier chart, that means we're going to break through this rising wedge at the same time as well. We'll see if we can hold this unadjusted level. Let me redraw this. Something like that. It just shifts around, really annoying with the unadjusted and adjusted. So the lines are just a lot different. So it's more like this. So this is the rising wedge, and we're pretty much right on the support. So yeah, we'll see if it holds. So pretty much bulls need to hold this, and bull break above this red looking line, which we have been testing 1, 2, 3, 4 times already, and bounce off of it 3 times. So let's see. Monday is going to be tricky because that Sunday night gap up, gap down, always tough to play. So if we gap down, then we're likely breaking through this already, which we're sitting right on it. And if we gap up right to it, then we still could potentially come back down and chop around it. But if we gap up above it, then that's a good sign. Then we're coming back up to potentially this $2 range. Would be the next level that I'm looking at if we break bull above this level. So we'll see about that. And I mean, historically, we don't get really much lower than 1.5. We could get to 1.44 or this around this lower 1.4 range, but historically we don't get that much lower. I mean, anything is possible. Of course, we could make a new low, and this could be the first time that net gas started to reach $1. Anything can happen, but we have it like back here, which is like 1992. But yeah, so just make sure you have your risk, stop loss, reward, and everything set. So if those things do happen, we see it coming. First thing we will see if we do drop is this rising wedge break bear, and we're going to come down to test these supports again. But so yeah, so just risk and rewards on. So let's see the 4-hour here. Yeah, the 8-hour is a little bit more clear to me because we've just been chopping within the 4 hours. Although the 4-hour on this is more clear, but here is not as clear. So 8-hour is more clear for the bounce because of this part. Yeah, we'll see. Bulls pretty much need to bounce right at the spot. All right, let's see UNG. UNG here. Similar idea. Broken above the 8-hour EMA 12. Bounce, bounce. Sorry, reject, reject, reject. And back above it. And currently did that form that same equilibrium with the natural gas. And finally broken above it. Now we're testing again. So we'll see if this can hold. So if nat gas is rising wedge, ends up holding and bounces exactly off of that, UNG's 8-hour EM 12 will also bounce exactly off this spot. We may get a bull break out of here. And if natural gas hits $2, we are coming back up likely to closer to 19 for UNG on this zone right there of resistance. That would likely be a lot of people's first target if we do a bull break out of gas closer to $2. See if that happens. A good sign, and maybe we'll form a longer term bottom if we start, heading up, big enough room, form some daily uptrends and continuing, and form some structures along the way. Maybe we'll have a longer term bottom, but we will have to see. And once we get the bounce going or not, we're still just a very early stage at the moment. If the bounce could be, anything. This could just be a weekly bear flag for all we know. Big drop. We barely retrace anything yet. This could just roll over. But at the moment, I have to see which way that rising wedge ends up breaking to have more confirmation. I guess it could just chop around here for a couple of weeks, and then it'll be a weekly bear flag if we just break through that. So I'll be cautious of that as well. But so far, bulls are starting to shape up at least something, a little bit of a structure here overall. All right. If you guys learn anything, feel free to like, share, and subscribe. And for the 15-minute call, feel free to join if you guys want to learn more about trading and see how you can improve your trading. If you want to improve tracking or anything like that, how to better setups. And yeah, feel free to book the 15-minute free call. It's just intro call, casual chat about what are you looking for and everything. And if you guys want to support the channel, feel free to go to the Patreon link as well. And let's take a look at oil. So oil finally got a bull break above this top that we've been talking about forever. And pretty much this was a breakout, back test, bounce. Bulls. And I was talking about that. I'll be looking up closer to this range if that happened. And currently we're pretty much just around it. So although we don't like that wick, upper wick, it's not a good sign for bulls because you want to at least close closer to the high of the day for more potential to come up here. See, let's level here. $76 is closer to here. Yeah, it's a little bit of resistance. You can see all these tops over here came up, ended up closing down here. So all these red candles just meant that we were up here at one point, and then we end up closing down here. So this is exactly what this did here. We were here at one point, and we end up closing down here. So there's a couple of resistance here at $76. It's not game over for bulls yet. This is just an initial red flag, and it's still in bulls' favor. So we can, just easily come back up here. And we are getting pretty close to the main resistance here of this downtrending resistance. So for a bull, adding down here and these bounces, we're probably taking some profit here already due to us being so close to a lot of resistance. Scale out a little bit and let the rest ride to see where it goes. As long as we are in a daily uptrend, we will stay back. Look at the US dollar. Not much for the past couple of days, still within 104 and 103. So we didn't quite get that head and shoulders look, but pretty much it kind of is. So this is the left head. It peaked above a little bit and we came down a little bit. So the idea of head and shoulders psychology of it is a uptrend into a downtrend. So if we break below Thursday's low, February 22, that's a downtrend confirm. And we're probably going to come down to test this looking line if that does happen. Support, support, support. Now price is below it. It's resistance. Now we're above it. So we'll come down. It'll act as support. But we may flush through it due to it confirming a daily downtrend at the same time. So, and breaking that neckline. So that may be a potential, but we'll see. But if we flush through it, we may come down to this 103, which is strong support here, and then bounce and form the lower wick here. That would mean that the support have held. Be a likely scenario that may happen. But first step, we still need to break this 103.6 first. So we will see. This was probably the manufacturing data came in on Friday, made this the dollar red. So we'll see. And TLT made it green. So very macro dependent on for the dollar. And gold had a breakout. So finally, and looks like, this black looking line we've been talking about acting as strong resistance. So rejection, support, 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 support. And then when we're below it, look at the 7 times we have been trying to get over that, right under that resistance. Finally, we got above it, and boom. And we had a weak dollar day as well. So perfect moment for gold. You want to see the dollar weak for metals to go up. So that was a perfect moment. Break above and head straight to pretty much 2080, which is prior resistance. And so now we're looking at, if we do break this prior high, which was this high, at December 28th high, and we're probably looking back up closer to 2157. Crazy. I mean, we're not gonna go straight up like this. Who knows? But we did over here. But the idea is that bulls will want to try to take up their however way they want. We have another pop, consolidate a little bit, back test, and then bounce higher. So we'll see how that goes. Yeah, idea of it is that if we do break 2086, we're likely heading higher. Higher. Let's see, silver probably doing pretty well as well. Pretty much hit this level of support and then bounced. That's a good sign. And we're either going to form an equilibrium here, or we're going to head higher and break above prior resistance at 23.4. So big move up, big move down, now big move up. If we can't get over this prior high, we're going to tighten up like that and then form an equilibrium. See, we can get over this level. It's $23.4 level. If we do that, then we're likely coming back up to 23.7. The scenarios for silver. Silver is slightly weaker. You can still see it's slightly weaker than gold. Gold pretty much closed at the high of its day. We're getting back about 20% of it. See what happened on the 5 minutes. No huge red flags here, but if we start confirming 15-minute downtrends, then we may start to get that equilibrium coming in. Technically, this is a 15-minute downtrend confirming right there. But let's see if we can follow through from the bears, because this was a big move. So a little bit of consolidation is okay. But if we start getting follow through on the downside, breaking the sideways pivot, then that daily time frame, bigger picture equilibrium is likely forming. This tightening range here, sideways. All right, that's like all you guys for commodities. I will see you guys potentially on Tuesday and for more updates. And if you guys have any questions, feel free to comment below, as well as take a look at the Patreon page if you guys want more details on, more details. And if you want to book the call, click the calendar link below. Have a great rest of you guys' weekend.